Good evening. I hope you all had a fantastic weekend and 4th of July. The markets continued the quarter starting off strong, as all three major indices ended the day in the green. The S&P 500 gained nearly 1.6% today, while the Dow gained a better 1.78%. And the Nasdaq had the best day by far, as it gained at 2.21% and ended at a record high. In M&A news, Uber has agreed to buy food delivery service Postmates for $2.65 billion worth of stock. Last month, Uber tried to purchase Grubhub, but failed. The company said Uber intends to keep the Postmates app running separately, quote, supported by a more efficient combined merchant and delivery network, end quote. Postmates has had success in specific urban areas, such as Los Angeles and Miami, but has struggled to compete nationally against DoorDash, Grubhub, and Uber Eats. Even after this purchase, DoorDash remains the biggest player in the food delivery space. Retail was down the most so far in 2020 during the week ending April 18th, as it fell 82.6% according to ShopperTrak. Retail traffic then was on a steady incline, but has now taken a hit and is on the decline due to fears of the second wave of the coronavirus. Last week, it was down 39.5% compared with the year prior, but it seems to be dependent on the state. 37 states, plus Washington, D.C., have trended down over the past 2 weeks on a year-over-year basis, while 13 states have shown improvements. Of the 38 states with traffic falling again, only 8 of those are requiring masks statewide. Of the 13 on the rise, 11 require the general public to wear masks. Commercial mortgage delinquencies jumped to 3.59% in the month of June, and is the largest one-month increase on record. These delinquencies totaled $10.8 billion. Fitch analysts are projecting that the impact from the coronavirus pandemic will drive the delinquency rate between 8.25% and 8.75% by the end of the third quarter of this year. Hotels and retail are seeing the largest amount of delinquencies by far, while industrial and multifamily are remaining fairly stable. Hotel and retail made up to close of 75% of the delinquencies. Goldman Sachs lowered their economic outlook for the United States. Goldman now sees U.S. third quarter GDP rising by 25%, down from their previous projection of 33%. Their primary reason for the downward revision is due to the rising amount of coronavirus cases, which will slow the pace of reopening. Quote, although a significant part of the increase reflects higher testing volumes, a broader look at the CDC criteria for reopening shows that not only new cases, but also positive test rates, the share of doctor visits for COVID-like symptoms, and hospital capacity utilization have deteriorated meaningfully in the last few weeks, end quote, according to Jan Hatzius, Goldman's chief economist. They cited their optimism comes from manufacturing and construction rebounding quickly, and that medical advances could severely lower the virus reproduction rate. They cited negativity from the political front, though, as President Trump's landmark rollback in corporate tax rates likely would be reversed should he fail to gain re-election this year. There is a bright side to Trump not being re-elected, though, which includes a reduction in trade tensions between the U.S. and China. Quote, although tensions with China will undoubtedly persist regardless of the election outcome, a re-escalation of the trade war would become less likely, and the prospects for international cooperation on vital issues such as climate change would improve, end quote, according to Hatzius. Goldman sees U.S. equities underperforming their global competitors due to the aforementioned reasons. Coronavirus hospitalizations have continued to increase by at least 5% in more than 23 states. As of Sunday, Texas had more than 8,000 hospitalized COVID-19 patients. States are also reporting record high coronavirus cases as the percentage of positive cases climbs. On Saturday, Florida reported that 14.1% of those tested for the virus were positive, while Texas reported a positivity rate of 13.1%. The average age of positive cases has dropped by 15 years compared to a few months ago, according to Dr. Fauci. Quote, "The average age of people getting infected now is a decade and a half younger than it was a few months ago, particularly when New York and New Orleans and Chicago were getting hit very badly." End quote. While young people are less likely to develop serious illnesses from COVID-19, Fauci warned that the virus could still, quote, "put them out of action for a few weeks at a time." End quote. On top of this, young people have the potential to spread it to others who might not have had such an easy time with the disease. Even so, young people with type 1 diabetes or who are overweight are at tremendous risk, as they are risk factors that don't necessarily fit with age. In our last piece of news, Chinese stocks surged after the state-owned China Securities Journal said investors should look forward to the, quote, "wealth effect of the capital markets," and the prospect for a, quote, "healthy bull market." Mark Williams, chief Asia economist at Capital Economics, said, quote, "There's quite a long history of policymakers using the media to drive up the market. It doesn't always end very well. We saw that back in 2015. Exactly the same statements then. They tried to push the market higher. It worked for a while, and then the market collapsed." End quote. The good day in the market was felt by all industries besides one, which happened to be utilities, as it fell more than 1.3%. Consumer services had the best day by far, easily gaining more than 2.6% on the day. Tech was the other best performer and gained close to 2.6%. Again, we see that the good day in the market was felt across the majority of the companies. Large cap growth performed the best as they gained 2.17%. Small cap growth had the worst day, but was still up 0.56%. The best performance in the S&P 500 today came from FreeportMcMoran, which is a mining company. Some of the minerals that they mine for are copper and gold. Shares of this mining company gained nearly 11% after the company says that it expects second quarter copper sales to exceed their previous guidance. Copper prices have been on the rise recently, as last week they rose for the fifth straight week. Bank of America even sees copper reaching $2.95 a pound by year end. Currently, copper is trading at $2.78 a pound. The other best performer was Xilinx, which is a producer of computer processing platforms. Shares gained 7.15%, as Goldman Sachs analysts reiterated a buy rating on shares, and have a price target of $113, noting the company's diversified end-market mix. The worst day came from Oneok, which is a natural gas company. Shares fell 12% as a federal court ruled that the Dakota Access Pipeline must be shut down within 30 days. This hurt a lot of energy companies, as a spokesperson for Energy Transfer Partners said, quote, "Shutting down this critical piece of infrastructure would throw our country's crude supply system out of balance, negatively impacting several significant industries, inflict more damage on an already struggling economy, and jeopardize our national security. This was an ill-thought-out decision by the court and should be quickly remedied." End quote. Regardless, this is a major win for the Native Americans and the environment. The other worst day came from Dominion Energy, which is a power and energy company. Shares of Dominion fell 11% and have a whole host of news. Yesterday, it was announced that Dominion Energy will be selling $9.7 billion worth of gas, transmission, and storage assets to Berkshire Hathaway. On top of this, it was also announced that Dominion's joint venture with Duke Energy for a project on the Atlantic coast has been canceled. No notable companies reported earnings today, although next week companies begin to report second quarter earnings. That is all that I have for tonight. As always, I hope you have a great rest of your day, and I'll see you again tomorrow.